Hello everyone, Mr. Joe here again. I hope you had the blast today. Today I'll be talking to you about the Bollinger Bands, and how to use it to make profitable trades. Okay, so and in today's vlogging, you get to know what Bollinger Band is all about, the purpose of Bollinger Band, the Bollinger Band squeeze, then the Bollinger Band breakouts. Then I also give you my Bollinger Band trading strategies. Okay. Yep. So let's get down to it. The first one, what is Bollinger Band? Now, what I'm going to talk to you about now is just theory, okay? But it's good you know the theory about how it was formulated, so that you'll be able to know how it will be applied. Okay. Now, Bollinger Band was actually developed by a man named John Bollinger. Okay. John Bollinger is a trader on its own, and you can search him out. He has a website where he wrote so many things about the Bollinger Bands. Okay. Now, Bollinger Band is a volatility band placed above and below a moving average. Okay. Now let me show you an image of how it looks like. This is actually John Bollinger, and this is the Bollinger Bands. Okay. After this, when we go to the practical section, I'll show you how to place it on your chart. So Bollinger Band is a volatility band placed above and below a moving average. Now this middle line is the moving average. Okay, and these are the bands placed above and below the moving average, which is this middle line here. Okay. Now, the volatility is based on standard deviation, which changes as volatility increases or decreases. Okay. Now, there are so many things you need to know about Bollinger. One of it is that the bands, these bands, the upper and the lower bands, okay, they automatically widens when volatility increases. So when you see it widening, like all these places that is wide apart, this place that is wide apart, okay, this place that is wide apart, just know that volatility is increasing. I remember when we say volatility is increasing, we are not giving you a straightjacket rule that it will be to the negative or to the positive. That will be for you to determine. And how do you do that? You join other indicators. Okay, you use other indicators to predict, okay, where you feel the market will move to. But Bollinger will just tell you that something big is about to happen, but it's not going to tell you when or how it's going to happen. Okay. Now, to summarize it, Bollinger Band is the plotting of two standard deviations away from the simple moving average. The upper band, the lower band, away from the simple moving average. Middle is the simple moving average, which is this line here, okay? And then the top band is the standard deviation above, and the lower band is the standard deviation below. All these things are grammar, but we'll get to the second part of which is what you really want to hear about, and that is the purpose of the Bollinger Band. Let's file it down, okay? Now, the purpose of the Bollinger Bands is to provide a proportionate definition of high and low. It helps you to determine where the price of a particular coin could be said to be high and where it could be said to be low. Remember, this Bollinger Band can be used in any other market. It can be used in any other market. The truth is, it also works very well in crypto. Those who trade forex, stocks, all those other markets, they use the Bollinger Bands, and it works very well for them. But in crypto, I've used it. I know it works very well. Like I used to advise people, there's no single indicator that can give you 100%. Okay, so when you're using the Bollinger, always support it with two or more other indicators, so you get the perfect trade. There's really nothing like a perfect trade anyway, but you get like a good trade. Yeah. So the prices are high when these prices hit the upper band. Like as you can see here, whenever it hits this upper band, okay, you can say that prices are high. You should not be buying here. You should not be buying here, okay? You should not be buying here, even if it's a bullish market, because normally this is a signal that the market is going, there will be a reversal in price, and then depending on the trend, if it is a bullish one, the reversal will just happen in a short while and then bounce back up, okay? But if it is a bearish market, you know where it goes. It's all the way down, but it will still be moving in Elliott wave pattern. Now when the price hits the lower band, okay, this is the lower band here, what should it tell you? It should tell you that this coin is very cheap and it's time to buy, okay? Time to buy when it hits the lower band, time to sell when it hits the upper band, time to sell when it hits the upper band here, okay? Time to buy when it hits the lower band, and then it bounces back again, hits this middle, and then say, I'll still tell you something about this middle, okay, for those who are aggressive traders and those who are conservative traders. I'll still give you my rule as to how to use it effectively. Now, what do you do when you go to a shop? Normally when you go to a shop, you like to buy it, you go to the shop that sells to you cheap, right? Okay, and then you go out there and sell high. So depending on the market where you play, either Binance or BitMEX and all that, the real thing is you need to use your Bollinger to determine when you should be shorting the market and when you should be longing the market. When you see that it has hit the upper band, what you should be doing is thinking of shorting the market, because the next thing is that market is going to come down. But hopefully it would be a good thing to use other indicators to determine how far it's going to go, because Bollinger is not going to give you that, because as you can see in this place it was ranging and I was hitting just the middle line, which is simple moving average, and then it will bounce back. But here it broke that simple moving average, came down here, touched the band before it moved up, and when it moved up it couldn't even break this simple moving average, bounced back again. So all these other ones, Bollinger will not help you with that. Bollinger will just tell you that something is about to happen, which is this downtrend or uptrend, but it will not tell you the extent to which it will happen or the direction it will happen. Other indicators will help you do that, okay? Now let's go to the third thing. Remember, this is just the theoretical aspect. We'll still go over to our chart so that I'll explain to you on a live chart. Now, Bollinger band squeeze. This is like the main thing when it has to do with Bollinger, okay? Now look at this chart very closely. Let me see if I can broaden it. Look at this chart very, very closely. I think this might not, I just hope you see this, okay? Now, if you look at this band, you see this squeeze, like when the upper and the lower band comes together and squeezes the simple moving average. That's the middle line here, okay? That is a strong indication that that something big is about to happen, okay? Now, let me just explain this squeeze very well. It is just a central concept of Bollinger band. When the band comes, that says that when the band comes close together, compressing the moving average, it is called a squeeze. And this is a signal period of low volatility. Now, when there is a squeeze, it shows that there is low volatility. And whenever you see that there is low volatility, that is the time when you expect volatility to come in. And when that volatility comes in, what will happen? This band will split open, okay, and open up just like it opened up here. If you are very sharp, you will see when it is opening up, even though it's a slow moving average anyway. It's very, very slow. Or if you're very, very sharp, you still see when it opens up, so that you can check if you like to like follow the trends, okay? You can now follow this all the way up. But whenever you see the band squeeze tightly, you should look at your chart to determine which other indicators where you feel the market we go, whether it's up or down. And as you can see from this chart, it's actually a bullish one, and I should expect that the next move here will be up, right? So, and I see a very tight squeezing of Bollinger, which signals a low volatility, expecting high volatility to come. And as you can see from the arrow here, it is a time to buy, right? You buy because the trend here is a positive one. But this is not just what you use. This is, you don't just use Bollinger alone to determine the movement. Do you remember Bollinger just told you that something big is about to happen, but it didn't tell you whether it will go down or whether it will go up. So you now use other indicators to detect that. But right now, since probably I've looked at the trend and I see that this is an uptrend, I believe that the market will move up. Okay, so you buy here, right? Why? Because of the squeeze, right? Expecting volatility to come in. And as you can see, all the way up here, you've profited until you hit this upper band. And what did we say about hitting the upper band? That it is a sign to sell, that there will be a reversal. Even though we hit it here, right? Broke it, tried to come down, and then broke it again all the way here, right? Before it now happened. And then it hit the lower band, broke the middle, the simple moving average, hit the lower band, and then bounced back. Now look at this place very carefully. You see the squeeze again. Now what matters here is that whenever there is a squeeze, there's always a very big move. Look at this place. Because of this squeeze, there's this big move here. This is a lot of money if you're a trader on BigMex, okay, or you're using all these forex platforms to trade. Look at this squeeze again. Look at the move that comes after it. Look at this other squeeze. Look at the move that comes after it. So for every squeeze, there is a probability of high volatility, either to the positive or to the negative. Very, very important. So when you're watching your charts for any coin, just be very, very careful. Place your Bollinger and see. Whenever you see a squeeze, use other indicators to detect where the move will go, because definitely the move will come in a very short while. Sometimes it takes 24 hours, sometimes it takes up to a week, depending on the time frame you're using with that Bollinger band. Okay? Now, just like I said, the summary of it all is that whenever you see a squeeze, it is just a potential sign of future increase in volatility. And increase in volatility could result to a positive, that is the market growing, or negative, that is market going down. Okay? Sorry. Yeah, so let's go to the third one, which is Bollinger Band breakouts. Bollinger Band breakouts. Bollinger Band breakouts. Okay? Now, it's been estimated that 90% of the price actions happen between the bands. Okay? This other, the other 10% are the trades, the price actions that happen outside the band, like what happened here, like what happened here. But on a general overview, 90% of everything happens within this band. So if only you just follow this band, it's possible you'll be getting 90% of the trades when you join it with other indicators. Okay? So Bollinger Band is a very important tool that if you start using it and you learn it very, very well, it's going to help you make profitable trades. Now, breakouts above or below the bands is a major event. When you see a breakout above the band or below the band, just know that there's a major event that caused that. Like in the crypto space, it could be that there was a hack. Okay, when you hear that an exchange was hacked or something bad happened and people panic sell, and then the whole thing dumps below the band. Is there any way it went below the band here? Something like this wick here, like this place here. Okay, these are results as a result of a big event happening. Now, whenever it trades above the band, okay, it still shows that a big event happened. So when you see such things, just go out there and search. You will see that there's an information out there, but a lot of people really do not pay attention to their TAs. But apart from that, on a normal ground, this price action is supposed to move within this band, and it does so 90% of the time. And as you can see, it moved above here, but it maintained it here, maintained all the way here, moved above here, maintained all the way here. It's like just 1, 2, and 3 times that it moved above the band, and below it didn't really move apart from this one, so just once. Okay, so pay close attention to your Bollinger bands. Okay, now knowing that price action remains within this band 90% of the time, whenever you see it hit the lower band, that is a good sign that you should be buying that market. When you see it hit the upper band, that is a good sign that you should be selling that market. And when it hits this simple moving average, the middle line is actually for conservative trader. If you're a conservative trader like me, you should exit the market when it hits the middle line, because there's every probability that when it hits the middle line, it can bounce back. The middle lines most times serve as support. Okay, now let me give you an example. Like here, when it hit this middle line, it broke it, but it didn't sustain it, and it bounced back. It hit it again here, and it bounced back. Okay, let me look for a clear example. Exactly here, it hit this line, and it's supposed to break it. But if you had exited here, it would have been a good trade. And a good rule of thumb, that's for conservative traders. But for aggressive traders, you can still wait for it to break it and hit this place before you exit the market. And as you can see, it hit it, it didn't break it, and then it bounced back. But those are, you know, rare cases. Okay, but you have to still watch your simple moving average, which is this middle line. They could serve as support, and they can also serve as resistance. So let's continue. Now let me now tell you my trading strategies using Bollinger bands. Okay, now there's what I call inside band trading. Now you have to pay close attention to use this strategy. You just need to find a coin that is in a trading range. Now we'll go over to the chart so that you see that by being in a trading range means that it is respecting the rules, okay, of Bollinger. Like it hits, whenever it hits the upper band, it drops. Whenever it hits the lower band, it goes up. Whenever it hits the upper band, it drops. Lower bands goes up, like what you can see in this chart. Okay, now you can see that this particular coin is in a range. Okay, and since it has been doing that like 3 or 4 times down, it means that it's likely to maintain that. So you now look or watch carefully to follow it like that. Like trade inside the band, buying when it hits the lower band, selling when it hits the higher band. Okay, now remember that you can use any time frame that you want. Okay, and that the greater the range, the better for you. Okay, now buy when price touches the lower band, like I said. Sell when price touches the higher band. Okay, exit the market when it hits the middle band here. That's the simple moving average here, if you are a conservative trader, because like I said before, this middle line sometimes serves as support and resistance. So when you are buying the market, that's when you're predicting that market is going to go up, and it hits this line here. Okay, watch it closely. If it could not break that line up, okay, just exit the market and wait for it to bounce back again to the lower band and buy again. But if it breaks it, your next sell zone will be the upper band. Just measure it and know where the price is at the upper band and place your sell at that place. Okay, now but for aggressive trader, like I said, they really do not pay attention to this middle line here, which is the simple moving average. They just wait and play with the lower and upper band. But like I told you, pay good attention to the 3 lines here: the lower band, the upper band, and the simple moving average. They all can help you make good trade. Okay, when it hits the upper band, you should be selling. When it hits the lower band, you should be buying. When it hits the middle band and bounces back, you should exit the market and wait to confirm that the simple moving average is now a support or a resistance, and then it will help you make a buying or selling decision. Now, the next strategy I use with Bollinger Band is what I call the pullback strategy. Okay. Now, the pullback strategy I talked about is actually using this simple moving average, which is the middle line here, okay, to detect where to buy. For example, when it hits the upper band, okay, and like we said, you should be selling, and you wait for it, and it hits this middle line and bounces all the way up, it is a good sign for you to buy, since it didn't break and sustain below that line. This is a good sign to buy. And as you can see here, if you had bought on this candlestick now, you would have followed it all the way up to this move. Okay, now that is it. It is the same thing with the lower band too. And as you can see here now, if you had bought here, because it didn't sustain it, it broke it all the way down to this place. But look at this place, it hit it and it didn't sustain it. The next candlestick opened and closed below, below the line, the simple moving average. And as you can see, it bounced all the way back, got support here at the lower band before it pulled back up. So watch it very, very closely, and you can use this second trading strategy, which is the pullback. Whenever you see a pullback to the simple moving average and there's a reversal, it is a good sign to buy, and the market will keep going down or going up, depending on the trend that particular trade was following. Okay, so I also remind you that you should always go in the direction of the primary trend. If the primary trend is bearish, please, the trend is your friend. You need to follow the trend. If it is bullish, the trend is still your friend. Always go in favor or in the direction of the trend. Because if you're always fighting with the trend, you really do not have enough money to fight with the trend. You're not Soros, yes, George Soros, who shorted when others were going long and all that. Because you don't have those billions, they'll just wipe your accounts. Okay, so just follow the trend. Follow the trend using the Bollinger Band. Okay, the way I like to use Bollinger Band is to use it with other indicators like the stochastic RSI, which you are going to see when we go to the live chart. Okay, I just show you all these things in the live chart. Okay, now if you look closely here in this chart, I think this is a better chart that followed, you know, the Bollinger Band rules. Now it hit this place, it was a call to sell. It bounced back, hit this simple moving average here, pulled back. Like I told you, this is like a second strategy I use. Whenever you see it hitting this simple moving average and it pulls back, it is a sign to buy. And when you buy, where should you be exiting? When it hits the upper band. This is a sell sign. Hit there, bounced back, okay, went below the line and pulled back, okay, a buy sign. Even though this time around it didn't hit this the simple moving average, but it's part of it, of this general trend here. Okay, formed all the way up here, hit this place, broke it, and followed it all the way up here. Okay, so the green lines are the sell zones, and the yellow circles are the sell zone, while the white circles are the buy zones. And as you can see, it maintained it most of the time. And if you had traded with Bollinger, you would have won how many times? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in this particular chart. That's not too small. Okay, now let's get down to the real thing by going to our charts and see how to apply this on live trade. So first thing you do is to go to tradingview.com. You sign in. Okay, it's a very simple thing. You create an account on TradingView, sign in, look for the coin you want to analyze. So let's say ADA is for Cardano. Okay, ADA BTC. So I click on ADA BTC. and go to my chart, full future chart. Yes, so when you are on, okay, as you can see, I've been using this tools, but let me just remove everything and start afresh, so you'll be able to understand how I use it. Now, the first thing you do is to place your Bollinger bands. Now, to place that, just go to indicators. Look at my mouse, okay? Click on indicators, okay? When you click on indicators, you see the search sign here. Click on it and search Bollinger. Once you type Bollinger, it will come out, okay? Now, this is Bollinger band, the first one here. I click on it. Once you click on it once, it has added it to your charts, okay? If I close this, now this is the Bollinger band, what I just showed you. This is a live trading session with Ada, that's Cardano, okay? Look at it closely, and you will see, you understand what I just told you. And like I told you, you can switch between time frame. This is the daily time frame I'm using. I can still switch all this time frame and see how Bollinger is doing on them, depending on your trading strategy, okay? If you want to leave your trade for more than a day or a whole day or 1 week, you should be checking from daily time frame, 1 week time frame, 1 month time frame, okay? But if you're a day trader, you should be looking at the shorter time frames. Do you understand? Now, I'm using the daily to analyze what is going on with ADA. Now look at this place. This was on 18th March, right? 218. It hit this band here. It bounced all the way back. What did I say about the middle line? That it is a sign to exit the market when it hits the middle line and pulls back. And as you can see, it hit it here, tried to break it, it didn't, it pulled back, which goes to say that this simple moving average here became a resistance point. What do we do when you see that? Especially when you see a candle, the next candle closing below it, okay? Closing below the line. What do? It is a sign that you should be selling, that this place is a resistance point. Now when you say what happened, it pulled back, okay? But if you're a long-term trader, that it hit this place and it wasn't able to break it, it's still no sign that that's if you're an aggressive trader. You can still leave it, because as you can see, even though it pulled back, it just gathered the momentum to do all this move, okay? But for a conservative trader, you can decide to exit, because you really do not know how far this move will go. Now, if you had exited, next place you should be looking at is lower band here, and it happened on the 27th. This one happened on the 18th till 27th. That was the buy time for this particular trading session. Now remember, look at the difference from 18 to 27. That's around 9 days. Are you willing to wait? Okay, no. Let me check from where it hits here. Okay, this is 22nd, and this is 27th. That's like 5 days. Are you willing to wait for 5 days before taking a trade? Because I see a lot of people who are always, every day they want to trade, every day they want to trade. That is not how to go about this market. Trade only when you see a clear signal, okay? And clear signals using the Bollinger is when it hits the lower band, the middle band, or the middle line here, or the upper band. Now when it hits this place, you see it respected the Bollinger and it pulled back up. Hit it here, pulled back, touched the middle line but couldn't break it, pulled back up here, broke out of the Bollinger band. Well, as you can see, it came back again, okay? Now look at it very closely. You see that it's respected the Bollinger rules like 80% of the time. Here it hit this place, pulled back, almost touched the line, pulled up again, okay? Same thing here. This is a buy signal, You could have sold here when you saw a reversal, right? Buy signal, sell signal, buy signal, sell signal, just like that, So like we said, the trend is your friend. You will not fight the trend, okay? This market generally is on a bearish note. You should be very, very careful not to fight the trend. until when we see a clear reversal as to signal a bullish market, then we'll know that the bearish trend is over. But for now, as you can see, it is still making lower highs, okay, lower high here, 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 okay. So until we see it make higher highs and retains that, then we'll know that the bearish market is over and the bullish, it will now signal the bullish market. Now let us look at what is currently happening now and what we should be doing. And if you look at it very closely, for like 2 or 3 times now, it has hit this middle line and respected it and pulled back. Now here it hit it, almost hit it, and then it bounced back all the way down, hit the lower band, bounced up, hit the lower band, bounced up, and hits this middle line. The same thing here. So we expect that when it hits this line, okay, that there's a probability that this market is going to go down. And as you can see, it almost touched the line, and that was at 1,187.92 Satoshi or thereabout. So, and it pulled back, but not yet time to determine because this candlestick is not yet over. Maybe the next candlestick will help us make have a definite clue as to where this market is going to. But definitely I should be looking at selling if I'm in this market when it hits this band. That's around that 1,180 to 1,190 Satoshi. Okay, currently it's at 1,164 Satoshi. Now where should I be looking at buying again if I'm to follow this rule? All the way down here around 908 Satoshi. Okay, now I might not just exit this market except I'm a conservative trader who just see it hit and I exit, waiting for a clear signal again to enter. But as an aggressive trader, I might decide to wait till I see the trend. It's like I see another candlestick open below this band to the negative, okay, then I know, yes, that this signal, this bullish trend here has ended, signaling a reversal in price. That is it for the daily. As it is now, you shouldn't be buying this market. It will be very stupid for you to be buying it at this point, okay. I'd rather wait when it breaks this middle line, that's the simple moving average. I can now buy on top of the moving average, okay, buy on top of the moving average and set my stop loss a little bit below the moving average as in where I entered, so that if that is a fake out and it breaks all the way down, comes down, then my stop loss will help me not to take too much loss, and then I'll just have to wait for the lower band. Okay, now let's look at it very closely. At this point it hit this middle line and it broke it. So if I had bought here, if I had sold here, what will I do? This second candlestick here is a signal for me to buy because it maintained on top of this, like it opened and closed on top of the simple moving average. So if I had bought again here, this is what I should have expected. And then I sell just when it hits the upper band. But it doesn't just flow like that. That's why you have to pay close attention to both the two bands, that's the upper and lower band, and the simple moving average, which is this middle line in between. Okay, so that is it. Now you can still switch between time frame for day traders or people who trade in shorter time frame. Let's look at what is happening on the 1 hour time frame. If you look at the 1 hour time frame, you see that it has even, the reversal is already happening. It hit the band here at 1172, broke it, came down, and now it is now going all the way down. Now on the 1 hour time frame, where should I expect this correction to get to hit this band? And that is around 1143 Satoshi. okay. And as you can see on the 1 hour time frame, it's been respecting it. It broke, it hit this lower, the middle line here, that's the simple moving average, broke above the upper band, came all the way down, and when it hit the simple moving average, it went up again, okay. It's been respecting it pretty much, you know, like 80% of the time. So I expect this to still pull back down to around 1145, and that should be my buy zone. That should be my buy zone, okay. Right now you're buying the market, you are just buying it at a very bad place. That's on the 1 hour time frame, because you really do not know what next will happen to this market. The good thing about Bollinger Band is it helps you reduce your risk. When you're buying above, when you're buying on top of this simple moving average, it reduces your risk, and whenever it breaks it, there should be a stop loss a little bit below the moving average, so that if it breaks the simple moving average, then the next buy zone should be when it hits the lower band. It's as simple as that, okay. Buy when it hits the lower band, sell when it hits the upper band. That is it, okay. So I think this is where I'll be stopping this lecture. I'd like to hear your comments, okay, if you really understood what you talked about, okay. Now you can go straight to John Bollinger's website. Just search it on Google, and you read up more about his theory, okay. And I've also put together the 22 rules of Bollinger. It is not my own, okay. It is John Bollinger's rule, and you can get that on the internet. But if you want me to send it to you, it's in PDF file. Just leave a comment, okay, with your email address, and I'll send it to your email for free, okay. Thank you for watching today's edition, and I hope it has helped you start using Bollinger to make your trades, and you understand that Bollinger is a very good tool. Now the next tutorial I'm going to do here, I will use other indicators to complement the Bollinger, so that you also understand how it works better. Like I said, do not only use the Bollinger, always support it with other indicators. Like when I support it with the stochastic now, it will give me a better signal. If you see now, you see that the stochastic on the 1 hour time frame is also supporting a downtrend, because it actually hit the oversold region and bounced back, and the blue line is still below the red line. Anyway, I'll take stochastic as a separate class, but whenever the blue line is below the red line, it is a signal that the market is still downtrending. The only time that is a clear signal to buy using the stochastic is when the blue line crosses above the red line. So I'll have to wait for this stochastic to cross, just like what happened here. Whenever there's a cross, it signals an uptrend, okay. The blue line crossing the red line. So I'll have to wait. So now the Bollinger is telling me that I shouldn't buy this market now. I should wait for it to hit this middle line, that's the simple moving average, or the lower band, okay, depending on how big this reversal is. And then the stochastic is also telling me not to buy. I should wait for it to get to the oversold region, which is anything below 20 here, okay. So with this now, the stochastic telling me not to buy, the Bollinger telling me not to buy. If I'm buying now, I am gambling, okay, except I'm using the shorter time frame or any other time frame that supports the trade I want to go in. But on 1 hour, I will have to wait to get a clear signal before I buy. So I think this is where we'll be stopping for today. Look forward to seeing you on our next video. Have a blast.